Hello, welcome to the European Open Briefing for Thursday, September 7th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So we are seeing a bit of a return for risk appetite as tensions over North Korea ease a little bit, although we do have ongoing concerns in the region as there are fears that North Korea may conduct another missile test this Saturday. So this is keeping gold supported near its recent highs. The dollar got a bit of a lift yesterday after President Trump unexpectedly agreed to a democratic proposal to lift the US debt ceiling, although this was only a temporary increase to the debt ceiling. So in 3 months' time, Congress will once again need to decide on whether and how much to raise the US debt ceiling. But for now, this has eased market concerns about an imminent government shutdown. The euro is marginally higher this morning ahead of the ECB's highly anticipated policy meeting later today. We had some Australian retail sales numbers early in the day, which fell short of expectations, hurting the Australian dollar. In contrast, the Canadian dollar surged to a two-year high yesterday after the Bank of Canada surprisingly raised interest rates at its policy meeting, and oil prices have yesterday they extended their gains. They are a little bit off those highs this morning as US refineries start coming online, although we could possibly see more disruption in the region as there are other hurricanes developing in the Caribbean and in the Atlantic. Let's start with the US dollar now. We can see the dollar yen did rise to just short of 109.4 yesterday. It since is to just above the 109 level. The dollar index didn't get that much of a boost. It briefly fell below the 92 level yesterday. It's currently trading at around 92.21. So yesterday, President Trump and Democratic Party agreed to extend the debt limit for 3 months till December. There was a counter proposal by the Republicans to extend it for 1 year. But the reason why Trump opted for the 3-year option was to so that he could negotiate an increase in military spending, which is strongly in support of. Whereas there were fears that if he agreed to the 1-year one, they wouldn't have had much room to extend military spending. Trump also said that he gave another speech on tax reform, saying that we should expect more details in the coming 2 weeks. But the markets, of course, are wary about these, about whether or not we will see tax reform. So for now, these speeches aren't having much of an impact on the markets until we see more concrete progress. We also had the Fed's latest beige book yesterday, where the survey showed that growth in the US remains modest to moderate, but there is little sign of inflation. This is added to expectations that we are likely to see a third rate hike this year. Moving on to gold prices, we can see that here in the chart, that high, 1-year high on Tuesday. Prices have retreated somewhat, although not too much. Of course, we do have ongoing concerns, geopolitical risks in the Korean Peninsula. The main concern for the moment is that on Saturday, which is when North Korea celebrates the founding of the Republic, North Korea may decide to carry out another missile launch. And it was reported a couple of days ago in the South Korean media that North Korea was moving intercontinental ballistic missiles towards its west coast. And adding to the tension, South Korea has completed the deployment of its missile defense system with the US. So although there is some the risk appetite has improved, there's still a lot of fears about what could happen next in the region. Moving on to the European currencies now, because the focus today will be very much much on the European Central Bank. The ECB is unlikely to announce its stimulus withdrawal plans today, but they will possibly signal an announcement for October, and perhaps they may even give some details of what to expect. The main thing worrying investors is that Mario Draghi may use this press conference to talk down the euro, following some reports that several ECB policymakers are becoming increasingly uncomfortable with the euro's recent gains. If we don't see any strong wording against the euro's appreciation, this could possibly lift the euro. On the other hand, lack of clear signals on tapering may hurt the euro. We also have another thing to watch in Europe is the Parliament debate in the UK, where they will be starting that long debate on the Brexit repeal bill. Labour has threatened to oppose the bill, and also there's concerns about whether or not the UK will be able to complete its negotiations with the EU on time. Despite that, though, the pound is doing rather well. It's currently trading around 1.3035, near 1 month's highs. Moving on to the Aussie and the Kiwi, we did have Australian retail sales early in the day. They came in, they were 0% over the month in July. Forecasts were for a 0.3% increase. Trade figures also disappointed, as a trade surplus was much smaller than expected. Exports fell by more than imports. We saw the Aussie drifting downwards after the data, although overall it's not, it hasn't actually fallen despite those swings. Yesterday we also had disappointing GDP data. The Aussie isn't too far from Tuesday's 1 month high of just about 0.80 level. The Kiwi, on the other hand, came under heavy pressure this morning after a poll in the country showed that the Labour Party is so far maintaining its lead over the National Party. This is negative for the Kiwi because win for Labour would possibly see more less market-friendly policies. So the Kiwi, we're seeing the Kiwi slip back below the 0.72 handle against the greenback. Quick look at oil prices. We can see that a strong gain over the past couple of days for WTI crude as more US refineries reopen after the shutdown following Hurricane Harvey. But we have another hurricane in the region, Hurricane Irma, has already caused a lot of damage in the Caribbean and could cause disruption to crude shipments in and out of the US. Also, we had the API numbers yesterday, and as expected, we saw a sharp increase in US crude stocks while gasoline and distillate stocks fell. We are going to have the official EIA numbers later today. The Aussie, the loonie, apart from higher oil prices, was lifted yesterday from a surprise decision by the Bank of Canada to raise interest rates by 0.25 percentage points to 1%. We saw the loonie surging to a 2-year high of 1.2134 to the US dollar. It was expected that the Bank of Canada would act in October, so the decision to raise rates in September surprised markets. Of course, this comes after the strong GDP numbers we saw for the second quarter, although we haven't, the Bank of Canada statement didn't really give any clear indications of whether to expect another rate hike later this year. Moving on to today's economic calendar, we can see we also had another central bank meeting today. The Sweden Central Bank met. They kept interest rates on hold at minus 0.5% as expected. We're going to have the revised GDP estimates for the Eurozone shortly, followed by weekly jobless claims in the US. We're also going to have building permits and IV, the PMI, out of Canada. But the focus, of course, will be the ECB policy decision. That's due at 11:45 GMT, followed by Mario Draghi's press conference at 12:30 GMT. That's it from me. Thank you very much for watching and have a great day.